What's up everyone, it's Karthik with Money West Real Estate. So in this video, I wanted to go over a step-by-step process of how I would go about analyzing a property in the US. So this is not going to be for Dubai, although we have done a lot of videos on Dubai property analysis as well. But since my next step right now is to look for investment opportunities over in the US, I'll be there next month. I'll be going to a lot of different markets: Phoenix, Arizona, Chicago. I'll be down south in Florida, as well as Massachusetts and New Hampshire. I wanted to go over my process, entire spreadsheet, what kind of numbers I'm looking for, and again, to help us get started with this discussion for real estate investing over in the US. So hope you all enjoy this and find it helpful. Make sure that you drop a like and subscribe to the channel. We're well over 1,500 subscribers, so thank you so much for being a part of our Money West Real Estate community. And if you want to purchase the spreadsheet for Dubai real estate, the link's going to be down below, and you're more than welcome to join our Patreon as well for a real estate discussion in our Discord, but also purchase the spreadsheets that I'm going over in these videos to analyze the numbers. So let's just get started. First things first, I'm going to come over to Zillow, and this is a property that I'm particularly interested in right now. I'm not looking right now for apartments or condo units, certainly not manufactured units. I'm mostly looking for single-family homes or duplexes, triplexes, so in other words, multifamily. And this right here was a listing in Rochester, New Hampshire for a duplex, listed for almost $400,000. So we're going to run some numbers on this property. I'm going to go over everything, literally from start to finish. This is the spreadsheet that I have, keeping it very, very simple. We're going to run through the numbers and see if it makes sense or not. So we got 2,160 square feet. So that's what I'm going to plug in right about here. So 2160. And I'm also going to put in the asking price, which is $399,900, which is, again, almost $400,000. And it's also for 2 units, right? So we've got a duplex here. Because if you read over here, you'll discover this well-maintained duplex located in the heart of Rochester. Side-by-side property offers 2 spacious units. Each unit has its own 3-bedroom, kitchen, living room, and a bathroom. Now, it's got 3 bedrooms and 1 bathroom per unit. So let's just quickly go over to some of the pictures. So boom, that's the front. You've got 2 different doors, so this side and this side. So there's 2 different units. This is, again, there's going to be a lot of work also needed to kind of put a little driveway in, put in some asphalt for the driveway. It feels like the wood over here, the staircase is all chipping off, and a little bit dirt right about there. So there's going to be some minor cosmetic work that needs to be done. I mean, the lawn in the backyard is pretty bad, so I'm going to have to put in a little bit of a fence and definitely do some yard work to make it look nice. But from the inside, it looks like a fairly good property, turnkey property, where you can have tenants move in right away because there doesn't seem to be any problems with this property overall. I may want to remove the carpets and just keep the hardwood floors, but that is something that I'm going to have to account for again in the renovation costs and everything else. So like I said, the carpets here may have to go because it just becomes more of a hassle and long term becomes more of an inconvenience than anything else. The bathroom again seems pretty decent. Again, these are all the pictures that are available. This is the kitchen area. I may replace, over the long term, the stove or the fridge. Seems pretty old to me, but as long as it's doing the job, then there's not really any reason to spend more money. But again, these are things that you may want to look into when you're going through some of the pictures of the properties here. Okay, so once we have gone through this, and we're going to come down a little bit, we're going to read over all of this stuff, which seems about normal. Again, there's going to be some construction, so built in 1881. It's not a new construction, obviously. We've got the entire lot size at around 6,534 square feet. Interior area of 2,808. Interior livable area is 2,160, which is exactly what's listed on this property listing here. And then if you come down a little bit, it'll tell you the transactions in the past. So 2018, it was sold for $65,000. So that was about 6 years ago. And as we know that property prices have appreciated quite a bit in the last 6 years, especially after COVID, when rates were dropped down to 0% in 2019, 2020 because of the pandemic. Property prices just have gone crazy. And that was again sold for $315,000. That was almost a 400% increase, or $146 per square feet. And now it's listed for sale 2 years later for almost $400,000, so 27% gain. So what you'll notice is, again, this 4-year period, we saw almost a 400% increase, and a 2-year period of 27% increase now at $185 per square feet. If you come down, this is the tax assessment. So you got some property taxes, $4,849 as of 2022. You can also try to estimate what those property taxes might look like in that area. I'll go over some links here. So for home insurance and also for property taxes, because at the end of the day, what we're trying to figure out is the rent, which is going to be your income, and then all the expenses, your fixed expenses, your variable expenses, your budgets, and then finally you got your summary over here. So this again I think is going to be very useful. Now, because for me personally, since I'm going to be an investor who is a non-US citizen resident, I'm going to be looking at DSCR loan options, which I've gone over in my previous updates. And DSCR loan options don't really require any documents or your income or anything like that. They simply finance the properties based on the property itself. So we need to have a ratio of over 1. That is a ratio of the rent that you're able to collect versus the PITI, which is your principal, interest, taxes, and insurance. So basically what I'm going to be doing is for this ratio is the gross rent, comparing this number with the PMT, which is principal and interest, HOI, which is homeowners insurance, and we've got property taxes. So these 4 numbers, principal, interest, taxes, insurance, all of that needs to be less than the gross rent that I'm collecting every single month. And so that ratio is going to be over 1. And that's when I'm going to be qualifying for this loan option. The higher the better, obviously. And I was just talking to my lender earlier today. If this number gets up to over 1.5, then that loan interest rate is going to drop down another 25 basis points, which is also a pretty big number here if we're talking long term. Now, the 1% test is simply the monthly rent divided by the purchase price. And if that number is below 1%, then, it doesn't really, there's not a lot of meat in the deal. In other words, there's not really much looking into that deal. But if it kind of qualifies for that 1% test, then yes, you can kind of safely assume that, okay, that deal may work out. Again, there's that element of may or may not work out, but that 1% test is kind of like a very rough estimate to whether you want to dig deeper into that deal or not. So the cap rate, we've got the gross cash on cash, we got the net cash on cash, we got the payback period, monthly and annual cash flows. So let's start with the very top. We got the purchase price, and financing wise, I'm going to be looking to put down anywhere from 30 to 40%. So let's just say 65% financing. That also brings my LTV, again, 65%. That brings my rate down to 7.25%. So again, I was talking to my lender earlier today, and we pretty much figured out that my rate right now is going to be just a little bit over 7%. As we know, the Federal Reserve is going to be looking at cutting interest rates by another 50 basis points in the next couple of months, November and December. And so that rate can be sub 7% very soon for me, which is what I'm very excited about, that eventually if I just wait a couple more months, that rate could be sub 7%. I can lock that in, and I wouldn't have to worry about refinancing for at least 5 years, because if I do refinance, there is a prepayment penalty as well for the first 5 years, and it's going to be a step down every single year. In other words, if I refinance in the first year, I'm going to pay 5% as a prepayment penalty. In the second year, it's going to be 4%. Third year, it's going to be 3%. And in the fourth year, it's going to be 2%. And in the fifth year, it's going to be 1% prepayment penalty of the entire outstanding balance. And in year 6, it's going to be 0%. So in year 6, I can refinance for no prepayment penalty. So I really want to start off with a lower rate because I'm not going to be refinancing anytime soon. So that's why interest rate, of course, is going to be a very, very important number in our calculation. So 30 years, 7.25%. Estimated closing cost, lender mentioned that it's going to be somewhere between 3 to 5%. I'm going with a little bit of a higher number of 5%, which again, $20,000 is a lot of money. And I'm also putting in some renovation cost and what that's going to cost me to put in, let's say, a new driveway, figuring out the backyard, which is the lawn, and some cosmetic upgrades that I may need to do to the property. That comes out to a total cash outlay of just under $180,000. That's how much money I would have to come up with for closing cost, for the down payment, and the renovation cost. Now, let's figure out the income and expenses. Starting with the PMT, that's automatically calculated for us, $1,773. That's going to be the 65% financing for 30 years at 7.25%. That's the principal and interest. Homeowners insurance, so I can pretty much come over here. Again, you can use a lot of calculators, or you can call up pretty much insurance providers to figure out what that's going to be for you. But looking at New Hampshire, $500,000 dwelling, these are all the coverages. We're looking at on average $1,072. And if you take into account that monthly payment, For premiums, it's going to be $89, a little bit under $90. So I'm going to put in $90 over here, which is on average. And if you come over to property taxes, which by the way were available, $4,849. If I simply go to this number, 4850, I think it was 4850. Yes. So if I do this divided by 12, you come in at $404. But I want to be a little bit more accurate. So I'm going to go with the actual zip code over here. This is nothing but smartasset.com. They allow you to calculate the actual tax rate, property tax rate, and the assessed value, right? So in the previous years, the values come in at an assessment of $191,800. So it's been significantly lower, obviously, than where the purchase price is or the asking price is. But let's say that I increase this number to $300,000. Now we're looking at $7,316. Roughly around 300 is going to be around 7,200. So I'm going to definitely be going a little bit higher to, let's say, $500 over here for property taxes, which brings it up to $6,000 per year. Again, this is just an estimate right now, just a rough idea. The actual numbers, I will have to call up the agent on file to get the property documents and what the last year's property taxes were to get a bit of a firm idea on what the property taxes might look like. So adding these three numbers in, and of course there's not going to be any homeowners association because it's a duplex, there's not a community or anything. So adding these four numbers up, we come to a sum of $2,363. And let's talk a little bit about the rent. So rent, you can pretty much go over the Zillow rentals to better understand what that rents might look like. Or also there's a website called Rentometer, which gives you the median, the average rents for that specific property. But it's also not free. I think the first 10 tries are free for Rentometer. I think I ran out of those free searches yesterday. Or maybe not. Maybe we can try it. So let's just try it. I think it's still opened up. I think it's my 10 tries per day or something. So let me just go ahead and copy this address. We're going to plug that over here. And it's going to populate itself. I'm going to put in more than 4 bedrooms, more than 1.5 bathrooms, or actually it's going to be 3 bedroom and 1 bathroom per unit. So we're going to check rents here. It's going to give me the rent for 1 unit. 1 unit rent, median around $2,200, which is again a 3 bedroom, 1 bathroom unit, $2,200. And if I come over to Zillow rents, if I plug in the same property address, let's say 42 or 44, depending on, it doesn't really matter. It's the same unit. 44 Congress, if you hit continue, we're looking at a median rent for this one at $2,300. So we got a couple different estimates, $2,300 according to Zillow, and then $2,200 according to Rentometer. So I think I can safely assume it's going to be somewhere around $2,200 to $2,300 per month per unit. So for both units, it's going to be closer to $4,500 to $4,600. Now, just to be on the safe side, I'm going to put in $4,000. That's $2,000 per unit per month. Okay, so $4,000 for the entire unit, entire property. Basically, that's 2 units. So $4,000 gross rent. We've already plugged in the fixed expenses. There's not going to be any utilities. The tenant pays for utilities, electricity, water, sewage, garbage, lawn care. There's going to be some monthly maintenance for the lawn. Again, New England, it snows pretty crazy. So you're going to have somebody to come in and remove the snow, or in the summertime, you're going to have someone to mow the lawn. So we got $50 per month for that, some miscellaneous expenses. And of course, you've got a lot of budgets, right? So as I've mentioned before in my previous updates and videos, that you definitely need to have 10% capital expenditures, 5% for repairs and maintenance, another $400, which is 10% of property management fee, another 5% for vacancies. So you're going to put this money aside to account for when these expenses arise, right? In the future, if something breaks down, at least you have the budget to fix it, right? You don't want to dip into your savings to pay for it. You've already accounted for all these expenses. So total expenses come out to $3,663, which leaves us with a monthly net cash flow of $337, which is actually not bad. My threshold is roughly around $200 to $300 per month in net cash flow after everything is paid for. And we are able to achieve a DSCR loan of 1.69. The 1% test, just slightly under 1%. Cap rates, pretty zero. We got gross cash on cash of 26%. But take a look at gross versus net. Net comes down to 2.25%. So that is obviously a lot lower than what I'm personally aiming for, primarily because of a lot of these expenses, right? So if I remove for everything, you'll notice that this property could cash flow $1,500 with a net cash on cash of well over 10%. But because I like to account for a lot of these things, net cash on cash, of course, comes down. The payback period over 44 years. And we got monthly cash flow $337 and annual cash flow of over $4,000 as well. Now, if the renovation cost is not as high as $20,000, let's say I can get things done in $10,000, then of course we're looking at a net cash on cash slightly increasing to 2.38% for this property. So right now we're going to put it back to $20,000. Now, really, it's the gross rent, which is the big game changer. And also, if you come over here, and let's say you look for similar properties, what are 3-bedroom, 1-bathroom units kind of renting for? So if I zoom in a little bit here, you'll notice this is exactly where the property is. You can see 2,300, 2,900. We got 2,300. This is a 2-bed, 2-bath. 2,700. We got 3-bed, 1-bath, but also a much bigger property, 1,500 square feet versus the 2,000 that we're looking at between 2 units. We got 2,400, which is a 4-bed, 1-bath, much bigger property, more beds. We got 2,300, 3-bed, 1-bath. I think this is a more of a comparable number right about there, which is $2,300 for that one particular unit. So I think I'm still going in with a very conservative estimate of $2,000 per unit per month, which comes out to $4,000 for the duplex. And I think this is a deal that I would be very much interested in. I've already sent it over to my lender, and we'll come back with see what he says. But of course, I'm not ready yet with closing. But we'll see what happens with this particular deal. I'll keep you guys updated. This is a deal that I really wanted to go over because it's very interesting from the fact that it's a duplex and the rents are going to be pretty decent in Rochester, New Hampshire. And I will be definitely looking into this in a lot more detail. So hope you all enjoyed this video. Again, a little bit of a step-by-step guide. It's becoming more and more difficult to find properties that kind of meet the 1% test, cash flow well after the mortgage rates where they are. So this is one deal that I was really interested in at the moment. So hope you all enjoyed it, found it helpful. Make sure that you drop a like, subscribe to the channel, and link's going to be down below if you are interested in joining our MoneyVest real estate community on Discord and talk more about real estate over in the US, in Dubai, and of course other parts of the world as well. As always, happy investing. I'll see you all in the next video.